Hello and welcome to this episode of Humans of Flippa. Today we are talking to 3 experts who will share their advice, experience and tips on the intricacies of selling online businesses. Joining us today we have Sophie Howard, who is the founder of Aspiring Entrepreneurs, a community designed to help entrepreneurs build successful businesses. She has also started, scaled and sold 6- and 7-figure online businesses herself and is currently an active buyer on Flippa. We have Neil Bostick, CEO of FIH.com, a tech-forward investment banking firm dedicated to success-based sell-side M&A services, who has sold $6.25 million worth of businesses through Flippa's broker program. And Ben Zogby, who recently sold his business HighStrike, an online educational stock trading business, on Flippa for $1.8 million, and has now gone on to start Exit Frog to help other entrepreneurs successfully exit. Thank you all for joining us today on this episode of Humans of Flippa. We're here to talk about selling online businesses, and I'm joined by 3 experts in the space. So if we can just start off with quick intros from all of you and a little bit about your general philosophy when it comes to selling a business. So Sophie, would you like to kick it off for us?
Brilliant. Thanks, Tori. So I've sold a 7-figure Amazon business. I think I might have been the first person to do that. It was years ago, 2015. And I've sold another multiple 6-figure e-commerce business as well. It's a tea subscription business. And they were both really good transactions, and I would totally recommend selling a business. And then I've bought quite a few businesses since then. So I just like to make sure the business I'm selling is really good quality and that the transaction goes really smoothly. You know, the right buyer makes that easy, and a good quality business makes it easy. But I've also really enjoyed buying businesses too, and just instantly acquiring somebody else's hard work and cash flow in one swift maneuver. So both sides of the equation are good. But I think, if you've got some debt or you are sort of running out of steam on a business that you've done the growth phase on and you're not maybe a natural optimizer, that might be the time to get out and let someone else who's good at all the fine tuning really squeeze the last bit out of it and sort of buy and hold it. But I enjoy the creative side a lot more than the optimizing bit. So I quite like that high growth excitement, but you can't stay at that pace all day, every day. It's pretty full on. So an exit every few years is really nice.
Yeah, nice for the bank account as well, hopefully.
Yes, very lucrative.
Awesome. Neil, what about you?
Well, I've been involved in a couple of businesses over the years, but my most recent endeavors being the CEO of FIH, which we are sell-side M&A representatives, which is like a fancy way of saying we help mostly online businesses to sell. We focus on the smaller middle market of primarily SaaS, digital media, and e-commerce businesses. And we work with owners around the world, basically take a given business, package it up, and then figure out the valuation that makes sense, given the market and as well as the owner and everyone else. And then we put it out for sale and then negotiate on the owner's behalf, try to negotiate a win-win deal for everyone involved.
And Ben, what about yourself?
Well, hey guys, my name is Ben Zogby. I founded a company back in 2018. Really started as a side hustle, kind of a digital company selling courses, e-products, what have you, in the trading niche. And in the first year or so, I really didn't get a ton of traction. But then after a while, we started dialing in our marketing strategies. And I think, my philosophy is a lot similar to Sophie's here, in that I really enjoy the creative side of things and the building, not so much the enterprise level optimization and scaling side of things. So the time came late last year to start looking for an exit. And in doing so, we found a really good private equity firm to work with. And we started the transition plan a long time before the deal actually closed. And in doing so, we were able to transfer hands quite effectively. And they've kind of taken the business and run with it. And I'm still working as a consultant in the business, which is great because, like I said, I really like the hands in the weeds type things, the creative side of things. And this gives me the opportunity to be able to continue scaling the business in the ways that I want to without having to deal with all the politics of management, all the hiring processes, all the C-level activities that go on when a business hits a certain threshold. I kind of get back in the weeds. And then this also frees me up to do some other projects on the side. I have a couple other businesses that are going now. We're looking to launch on January 1st. I'm launching a big AI software company. So a lot of exciting things that I've gotten freed up to do since the exit, and obviously the cash incentive's nice as well. So really, it's a win-win, for the buyer and for the seller. The buyer, they get a great asset, like Sophie said. It's a great way to kind of just pick up a business that already has a lot of stuff going for it, and you don't have to build it from the ground up from the buyer side. And from my side, I get to go back into the creative side and do the things that I really love inside the business. So that's really what excited me about the transaction, and has really impacted my life in this kind of chapter here.
So Ben, like you were saying, you kind of are still involved in the business that you sold, but maybe in just the parts that you're kind of more passionate about. How do you make that decision and know when the right time is to actually sell the business?
You're never going to know in the moment when the right time to sell a business. It's just like trading a stock or investing in a company. There's no way to know in the moment that, okay, now's the right time to sell or now's the right time to buy. There's certain optimizations you can make and certain educated guesses you can make. But I think what it really comes down to is opportunity cost, I guess, for me, is am I able to spend my time, one, how I want to, and two, as effectively as I can. And once that answer starts to creep towards the no, right, it's always a spectrum. Once that answer starts to creep towards the no side of things, then I think, in my opinion, that's when it's time to start looking for an exit. Obviously, there's dollar on dollar ROI you can look at, and like if it's strictly dollars, like obviously you want to sell while you have the nice upwards trajectory because your multiple's higher, your valuation's higher, all that good stuff. But there's also the kind of operational variable to look at, in that, like, if you're doing things that you no longer want to do in the business, and you can get a decent chunk of change for it, at least in my opinion, that's kind of the best of both worlds in looking for a time to sell, is when you kind of hit that point.
Sophie, so yeah, selling your Amazon business, as you said, one of the first kind of big Amazon sales potentially. How did you broach that how did you make the decision to sell? How did you actually start to look for a buyer if it's kind of the first time that something like that has sold for such a high price?
Yeah, it was pretty early on. I'd only been trading for about 15 months, but I'd done my first full year's tax returns. And that's like March in New Zealand. And I was like, oh, that was quite good. Nailed it. And as maybe some beginner's luck, I was like, this is a really valuable business. Surely this is worth something. And at the time, I had a baby and a toddler and a mortgage. I'd been at a conference teaching something about Amazon in the States, and boarded my plane home, and I got a message saying, oh, the payment's come through. He needs the password. It was like, give us $1 million and I'll give you the password, kind of a contract. And as I boarded the plane, I just did some internet banking and paid off my entire 800k mortgage.
Yeah, that's really amazing.
So not only did I get the cash, I didn't pay the bank another $1.5 million in interest over the next 20 something years.
Yeah.
But it did leave a bit of a funny hole afterwards. It's amazing to get a massive lump of cash like that. And I just kept it a really clean cash deal. And I felt like I was still going to build more Amazon brands, which I did. But it did change because I was so dialed into optimizing that business and growing it and catching every lightning deal and watching all my competitors' reviews. And as soon as I had that much money, my brain wasn't quite as sharp on the decision making. I just needed a bit of a break. So I had a big holiday for 3 months in Bali, which was very nice. And then I built and sold another brand. But I think it's good to know what you're going to do afterwards as well. And enjoy the lifestyle opportunities that come from an exit, because you can't keep going. The deals themselves are a big effort to get over the line. There's a lot of oomph to do it.
Yeah.
And you don't want to collapse in a heap or rush into the next thing too quickly.
Yeah. So with that one in particular, it sounded like the deal happened pretty quickly.
Really quickly. First person who looked at it bought it. And he's an investor in Salt Lake City, business guy. He's still running it. And the second one I sold was a tea subscription business, and that's going really well. They did $1 million on Amazon last year. And they keep asking me if I've got any more I can sell them, but I don't actually do Amazon FBA anymore. I teach people how to buy online businesses now. So
I know from Ben's experience of selling on Flippa, it was pretty quick, but I think it was a bit longer than that. How does that kind of stack up for you, Neil, in terms of the sales that you're seeing in time frame?
Well, yeah, congrats to you, Sophie, for pulling it around, both bringing a business to be sellable in 15 months and also getting it sold within 2 months. That's very good timing. But But traditionally, our brokerages work off like a 6-month period. Usually, after a couple calls and 2 or 3 weeks, we have evaluation and can get into contract. And then from there, it might be another 2 or 3 weeks to actually package the business up. That's taking all the financials, making them monthly, getting a questionnaire, packaging. So it's very easy to understand, what the user base is, as well as kind of growth opportunities and the present operations of the business. And then from there, usually, 1 to 3 months to find a buyer, and then, another 30 to 60 days of due diligence. In an ideal world, it would be, as simple as, you show everything clearly, you find a buyer, and then they say, hey, I'm interested. They submit an offer, and then they accept, and the money gets transferred. But, a lot of times there's a lot of different small and big skeletons in different closets, depending on what the business is, or there's things that might need a little more explaining and verification.
Yeah, let's sort of, I guess, go back to the start a little bit. It doesn't sound like you necessarily built your business, Sophie, or that particular one with an exit in mind. How important is it, do you guys think, to build a business with the plan of selling, or when should you start to think about potentially selling if that's something a business owner wants to do?
No, I hadn't deliberately started that one to sell it. But I think it's really good discipline to imagine you might have to sell it at any time. Like somebody clicks their fingers and it's for sale. The team's contracts are transferable. The paperwork's in order. The accounts are up to date. Everything's documented with SOPs and things. So I try and do that as a very conscious thing now and keep everything. We actually use Notion to track everything. So somebody could have one Notion password and see everything that moves in every one of my businesses. And then we actually communicate in Skype, which is a bit old school, but between those two, everything's sort of running pretty up to date all the time. The next business is actually very deliberately building to sell. And I've got a scribble thing. Actually, can't quite see it because it's the whiteboard. Can't see right behind, but I've got a quarter by quarter plan to start something that goes live. It's in final beta testing now, a SaaS business. And I want to sell that next Q1, like a year and a bit from recording this. So yep. 12 full months running, 4 quarters of really fast growth, and then sell it when it's on that upward kicker. And I've done a business plan, which I rarely do. I never did a business plan for the first ones. And that's sort of got a $2 million US sort of exit point with hitting that number of subscribers each month, with a few random assumptions about churn and whether our test price is actually the final price that people will actually pay. Yeah. But given it's valued hopefully on a multiple of the revenue, I just think those SaaS business, if you can sell a SaaS business, that's just the best game in the world, surely. I mean, you can't beat it. If you can find, I think it's only something like 6% of all the listings are SaaS and online, not even all the businesses, but online. And they're so appealing to the next wave up of investors who can scale them. So I think also for that one, I'm going to put my foot down a bit because there's no other offer quite like it. There's agencies that offer a manual service for it. Mm-hmm. I won't give too much away to carefully choose my words here, but it's to do with publishing, and I've got an ebook publishing business. So it's a really unique offer in a really clear market. And I have an existing market of other customers that I teach publishing to. Yep. So I've got a bit of a head start, but also somebody could copy it and there's nothing else like it there right now. So I'm going to try and go fast and out and sell to somebody within the industry.
Ben, would we have classified your business as a SaaS business?
I wouldn't say HighStrike was a SaaS. It's more of a info product, educational coaching offer. But Sophie, so interesting you say that, because I think the first go round, I noticed and I realized how valuable SaaSes were. And that's actually just like you, that's what I'm building now, is because you see these multiples and you see like listing prices. If you just scrolling through Flippa, you see listing prices in like the 6 to 10x profit. And it's like, how do you get something to get valued that high? And the answer is just SaaS, building something that has that recurring revenue. And, these other companies, these private equity firms, they're built to kind of just scale these things. They have in-house marketing teams. They have all the resources they need to take them to 10x where they are. And they've done it before. And I think showing them and presenting them something on a silver platter where they can say, hey, I can definitely scale this thing 10x where you've brought it. There's a ton of value in that, and you can upcharge a lot there. So in complete agreement with you there on SaaS being so valuable.
So yeah, let's talk a little bit about the actual valuation of a business, because I know, Ben, I think for yours, the initial valuation was around 1.3 million. Is that right? And then you sold it for 1.8 in the end.
Ooh, nice
So
work.
how do you guys kind of look at valuing a business? As you said, obviously any kind of recurring revenue is extremely valuable for potential buyers, knowing that that is coming in a recurring manner.
Yeah, so I'd say, I guess at the end of the day, a business or anything is only as valuable as someone's willing to pay for it. So I think there's a lot of factors that go into it. I think, at least for me, the biggest kicker on the value proposition was, I guess, just market trends and like kind of just being honestly in the right spot at the right time and anticipating the trend, because in 2020 we had such an influx of self-directed traders looking to take their time off in COVID, looking to do something with that time. And there was some anticipation, there was some strategic planning where we were like, okay, we think this is going to be pretty big. But also there's honestly a luck component to it too, where you're kind of just sitting in the right place at the right time. So if you can get in front of a trend like that and you can spend time doing research on kind of where interest is going to flow into the future and put yourself there as it's flowing there, I think that there's a big element there in terms of valuation, that buyers are much more likely to pay top dollar for a business that is in an emerging market or a big market like trading is and was in 2020, or Amazon, in the last 5-10 years has become massive. Like these industries that are just growing and here to stay, just like SaaS as well. I think that's a big component as well. Obviously, there's the revenue, there's the profit calculations you can do, and multiples too. But to a certain extent, I really think it's, being in the right market and capturing the right amount of interest.
How do you kind of go, Neil, when you're working with sellers on setting a price and looking at the value of a business?
Yeah, valuation is always the fun one. I think a lot of valuation really just goes back to, the psychology that like kind of everyone around the earth has, in the way that like, if you spend like money on an investment now, like chances are the way you're going to arrange it, there's going to be, you're going to get your money back within like, let's say 3 to 5 years. And if you look at like a traditional business, like maybe Amazon, or maybe like a traditional digital media business that makes money on ads, or like an affiliate business, or something where there's like one-time revenue that, you might think there's a high probability you're going to get the same amount, next year, but it's not recurring or guaranteed by any means. And those kind of businesses are valued on profit because of this, where, if you're making 100,000 a year on one of these businesses, chances are, a lot of buyers, assuming there's no growth premium or anything else, a lot of buyers are going to want to pay somewhere around like a 2 to 5x range of like, so say it might be valued at 200,000 to 500,000, because they'd assume that if they bought it and there's 100,000 profit, then that would mean that, each of the next, 2 to 5 years, depending on the risk preference and their business itself, they'd get their money back. And if you look at SaaS businesses, the reason why they're valued a lot higher, is because they're basically highly scalable. And they're highly scalable because they're a product business, usually, that's recurring revenue. So any additional customers they bring on, they can bring them on very easily, assuming it's not like enterprise and people can just log in and sign up and do a free trial and then put their credit card information in and do it nice and streamlined. And it doesn't cost the company really any much more. Yeah, and from the psychology of, the payback in 2 to 5 years, with the SaaS business, if they're doing 100,000 profit now, and the new buyer knows that they can very easily add on that new revenue just by using their customer base, their marketing channel, then they could project out that despite paying, 10x the profit, they know they're going to get their money back in, 3 years, just because they're going to grow it at least like 30% or so. And so it equals out with the same, like, if it's Amazon business, it's very scalable as well, but, to be able to hit that kind of growth, you got to buy more space in the warehouse, and you have to coordinate here, and then like, and there's risks added, versus like a SaaS, there's not much downside outside of like losing customers.
Yeah, that's definitely kind of what we're seeing for SaaS businesses in terms of multiples. I think the average is around 4 or 5. I think we had a top of maybe 40, which was pretty amazing, but 40 times. But those are the kind of outliers. Okay, so let's talk a little bit about finding the buyer because, yeah, you want to find someone who is the right buyer for you. It sounds like your first business, Sophie, you sort of had a buyer fall into your lap.
Yeah.
But for your next business that you want to sell, how are you going to go kind of finding the right buyer for that business? And what do you look for in potential?
Well, we want to work backwards from a bidding war, really.
Yeah.
Which all the serious buyers will be heading off to Flippa to make their best bids and have a flurry of finance to make an offer that we accept. But yeah, there's obviously screening them that they're serious, that sort of proof of funds, or, just the how serious are they test early on with a call. And a good broker in the middle helps sort the wheat from the chaff a bit there. Yeah, I think the right kind of buyer, I do like mostly cash. I don't ever want to do tricky finance things. So I'll always take a pretty hefty discount to have cash buyer. I think that's really important. I think so. I mean, I've watched a lot of people in the Amazon space just get absolutely destroyed by payout clauses on their exits of FBA brands. So don't want to go down that track. So I think for my sorts of businesses, and we talked about this, excuse me, earlier, like the bit where you're in your sweet spot of growing your business and that creative bit is different from the skill set, taking it from sort of the million-ish mark to the 10 million-ish mark. And then there's the big private equity guys who've got a completely different game underway. So I quite like the idea of selling to another high net worth individual who's maybe got a related business. So mine's a self-publishing industry thing. There's some pretty big operators there. There's people with, an Amazon FBA thing that might be interested in an Amazon Kindle thing, Helium 10. Someone like that might see it as a strategic acquisition. And when they look at my numbers, they can sort of value it based on what my code cost and what it would cost them to work around it and reproduce the same code, like getting Microsofted, when they just look at all the startups for sale and then nick the ideas and build it in-house. But you want somebody who can complement it in some way. So if I've brought all my audience into this tool and then got their income streams running, and then I sell to someone else who's got a complementary database, then that could be really valuable to them. And then they would maybe pay over the odds for it and sort of do some kind of roll up.
Ben, you obviously have a quite good relationship with the buyer of HighStrike, given you're still working with them. How did that kind of relationship get formed, and how were the negotiations on that sale?
Yeah, so we took about 7 months to close, which felt like a long time at the time. But the more I kind of am in this space, the more I realize that's a pretty normal timeline. In terms of working with them going forward, kind of the plan from the start was to have a decently long transition plan in place. Because at the end of the day, no one's going to know the business better than the founder, even coming in from outside with all this experience. So our plan was to kind of work hand in hand. I'm an advisor right now for the company still. And I work an hour a day-ish, give or take, on kind of just advising them on what to do. But it's been a really good partnership. We even got started doing a lot of operational things before the deal closed. And I don't know what kind of advice brokers would have about that. I know there's some risks to doing that, but that was kind of a calculated risk I took in starting to work with the buyer before we closed and putting some things in place, which actually helped our revenue numbers quite a bit, even pre-close. So obviously that cash went into my pocket instead of into their pocket post-close. But it's been a really good working relationship. I think they bring a lot to the table, as do a lot of buyers. It's a partnership of 3 guys, and they all kind of have complementary skill sets. One's kind of the finance guy, making sure everything's settled in terms of compliance and accounting and financial projections, and then the other 2 are very well versed in their marketing, and they've really been able to help us kind of align everything in a way that I wasn't able to do, because remember, I was an engineer before this. I didn't go to business school. I didn't go to marketing school. I sort of duct taped a business together and then was like, oh, look at this. And basically said, I need someone to come in here with real experience and take this to the next level. So they did a really good job kind of bringing their skill sets to the table and jumping in where I wasn't able to grow the business. And in doing so, we've already started seeing things that we haven't seen yet in the company's history. And I think the company is on a really good trajectory because of it. So that partnership in this case was extremely instrumental in the success of the business.
Yeah, that's very cool. I think you're underselling yourself a little bit there, but in terms of your experience, but yeah, very cool. Neil, how do you go with kind of helping sellers negotiate with potential buyers and negotiating a price?
I think a lot of it's just about transparency of information and just trying to give everyone the best idea of where the current state of the business is, and then just being very cordial and trying to answer any questions and kind of lead to the next step. Things like Ben's describing with like working with the buyer pre-closing, I think it's good and bad. It's definitely good to establish rapport and trust, because a business is not just like an asset you're buying. It's not a product. You really have to, it's about, as much about the people and the team as it is about the business itself. And most times, and understanding how it works and how it's managed and everything else. And so it's important to have the emotional aspect of having the buyer understand kind of what the seller's doing and kind of how everything works together.
What sort of advice would you give to business owners who are looking to maybe increase the value of their business, or how to best present their business to potential buyers? Sophie, you want to jump in on that one?
Okay, we're quite the SaaS fan club here today. I think you really want to try and, is there an app for that? Can you productize something that's a service or automate some kind of payment that's really sticky? I think not just recurring, but as in you need a subscription to it, like it's built in and wired that credit card every single month is the ideal business model. I think, roll out a few new features, but also have a growth plan and run it as if you're going to keep growing it yourself as well. Hand it over with lots of future upside potential that you've said, oh, you could add this feature, or, I've never even tried paid ads or whatever. None of my stuff's with paid ads. So if you can sort of point to a growth and sort of some strategic new directions for it, that could excite the buyer, so they can sort of add their skills on top.
Yeah, we definitely see, I think, when a business owner makes the decision to sell, and this kind of comes back to the timing of it all, that maybe they've sort of decided to sell too late in the piece and they're a bit checked out, and so they're sort of letting their foot off the gas a little bit in terms of growing the business, which then will obviously impact the value and the price that you can potentially get. So yeah, that's really...
A few businesses listed at the moment that have been whacked by that latest Google update, and so their traffic's down, their revenue's down, they're feeling really sore and really sad, and they're not that motivated to put the work in to grow it back up because they're not sure how certain it is.
Yeah.
So you can see they'd be kicking themselves. They didn't just sell it when it was, you never know when the next low is going to be, but if it's high and going well and you value 3 times income all at once, take it.
Yeah. We say there's never a better time to sell than when the profit or revenue is growing. So stable is good, but growing is better.
Yeah.
Ben, what would your advice be to any potential business owners considering selling?
Yeah, so I guess number one would be just get ahead of sellability. Like even if you don't think that selling is something that you want to do right away or even necessarily down the line, it's still good practice to structure your business as a sellable asset, because it's going to make more, it's going to be better systemized, and it's going to be easier to scale. Just because of the way that you're putting things in place, if you think about having to hand the business off to someone and make it a appealing product in and of itself, you're going to do all the things that you need to do anyway that are going to enable you to scale. And so that's honestly one of the things that simplified my business a lot, was instead of just like internalizing all of this and having the entire business in my head, when I started putting SOPs in place, when I started getting things on paper and like getting the business out of here and into here onto the computer for like my teammates and my employees to see, like the business, we felt the business kind of systemize itself and shift and align itself in the right direction, just because everyone was on the same page. So even if you're not planning to sell the company, I still would recommend doing these things and systemizing the business. And I think the number one thing would be to think about the incremental cost, energy, effort, stress that each additional customer is going to bring to you, and try and find a way to minimize all 4 of those. And if you can do that, you've really created a systemized business and a scalable business that someone out there is going to really find valuable and really be able to scale. first and foremost. And then obviously, like Sophie was saying as well, the recurring revenue, it's just the stickier you can make a product, the is there an app for that mentality is really going to be attractive, because, you know, in today's age, like, people don't want to be manually fulfilling stuff anymore. They don't want to be like spending 8 hours a day on one customer. You know, and I realize there's businesses that by nature have to do that. But if you can really systemize things and make things sticky and put things into software and subscriptions, instead of just having to like wake up and I have to sell 5 products today, oh my God, like, just to keep my business going, right? It's going to be a lot more scalable and a lot more appealing to someone that wants to buy it.
Yeah, awesome advice. Thank you. And Neil, what about you? What would your number one tip to any business owner?
Yeah, I agree pretty heavily with Ben. Basically, I mean, all the marks to make a good business that's sellable are the same marks that are to have a good business yourself. So in building a good business, you make a good business that's sellable. And I think a lot of times, you know, people, you know, kind of have to choose between whether they want, you know, more of a lifestyle business or like more of kind of like a venture business. And, you know, it's a little bit more complicated to ask, but when you see someone, you know, create a startup nowadays, it's kind of the question they have to ask themselves, whether, you know, are you trying to naturally grow something and then, you know, own 100% and then, you know, make it profitable to grow? Because if it's not profitable, then, you know, you can't afford to make it, essentially, or maybe you can, but that's a different argument. But if you're doing a lifestyle, you know, having it sustainable by itself makes it attractive. You know, if it's more of a venture route and you're raising money to grow, and it's like a SaaS business and it's scalable, that puts you on another trajectory, that kind of where you're almost forced to sell, or that's like not forced to sell, but it's, you know, it's either you're going to sell, IPO if you're lucky, or, you know, get acquired by someone, or, you know, and from that lens, either way, I mean, when someone asks me how to make your business more sellable, and increase value, and no matter what niche it is, whether it's like, you know, e-commerce or SaaS or even like an ad, like a media company that makes money on ads, I like to say, like, how do you increase the recurring revenue? Just keeping it simple. Like, even if you're an e-commerce business, like for Sophie's example, if you're selling tea and you're able to make it a subscription and everyone's like coming to you from a subscription, then, you know, that in a way, you know, if you're drop shipping it and it's a subscription, it's almost like a SaaS company, because there's no margin for you to do that. You don't have to get inventory yourself, and every customer you add on is just more revenue for you.
Awesome. Well, thank you all so much for your insight and advice. I would say my biggest takeaway from this is build a business with recurring revenue. Yeah, but it's been awesome to chat to you and get your perspective on selling online businesses. Thank you all so much.